Welcome to the Closing Beat, everybody. Happy Friday. Welcome. Hope you're having a good day here today. This is our stock market show where we do just to cover what happened, what's going on in the stock market. We give you the good, the bad, and the ugly. We give you some data. We give you something to take with you so you learn something new. We do this for our customers, but we also share it publicly. So maybe if you find that you need help from a financial advisor that is actually here every day and doing work for you, maybe you'll check us out at jazzwealth.com. You can also schedule a call if you want to chat. You could go right on our website, click Chat with Jazz, and we'll help you out with anything that we can. And if we're a good fit, great. If not, we'll send you on your way. We won't bite. No sales pitches there. All right, let's talk about what's going on. Hey, if you're one of our customers, the class that we did last night, 3 types of margin. It's now live in the dojo. The dojo is a private little library you have for you where I share the charts and everything, but also the videos from our classes. I got a lot of emails on that class. You guys really like that, so something different there for you. We do portfolio updates as well, so we got one of those coming up every month. We talk to our customers about how things are going, good, bad, and ugly, sort of like this, but a lot more detailed and a lot more fun. In my opinion, there's a lot more we can cover. Next Thursday, by the way, the markets are closed Monday, you know that. But on Thursday, we're having Mr. Josh Scanlon here from Heritage Wealth. We're going to do some live shows with him so you guys can ask some questions. If you've never met him before, I've never actually met him, so it'll be nice meeting him in person. But boy, the guy's a brain, man, so I look forward to that one. Let's talk about the markets now. I've covered all my housekeeping there. You got the Dow higher by 95 on the day, S&P 3, and the NASDAQ 8 points on the day. Bottom right-hand corner of your screen, you can actually see how the S&P performed throughout the day. Mostly positive, a little bit weak. Just a lot of people thinking, hey, do I really need to take some risk going into the weekends? This long weekend here. The markets overnight, the futures market really started to take off when Europe opened and we found out Theresa May was going to resign. That's sort of impressive over there. That's a fascinating story if you follow the whole Brexit thing going on. I don't touch on it much because do you really want to know? Other than that, it was that started our markets higher. But when they opened, people said, "Look, I don't need this risk. We got a long weekend. We have China concerns here, so basically the markets pulled back." That leaves, and typically on Fridays we do sort of a broad-based update. That leaves the S&P 500 down about 4% for the month so far. For the month of May, you got the NASDAQ down about 5.5%, and the Dow down 3.7%. Now you're going to see on TV they go, the Dow lost 5 weeks in a row. Remember, I always tell you, when somebody gives you a stat like that, you go, well, what does that mean? Like, is that good or is that bad? I mean, I get it, the Dow has lost 5 weeks in a row, but did it just barely lose 5 weeks in a row? Did it collapse for 5 weeks in a row? Like, how much trouble are we in here? So we went back in time and did a little study for you here. The Dow has in fact lost 5 weeks in a row. This has not happened since June of 2011. So you can tell already, all right, it's sort of a rare thing. That's not good that the Dow falls 5 weeks in a row. In fact, if you look over its entire lifespan, the Dow, that was what we're talking about here, it has lost 5 consecutive weeks in a row 64 times in its history. Okay, that lets you know, well, that's kind of rare, right? For how many weeks there's been since 1900, that's pretty incredible there, before 1900. Now, of that, we go, is that good or bad? Like, how big was the drop, whatever? 60 of those times fell more than we've fallen so far, these 5 weeks, meaning this is really a shallow drop. I'm going to pull it up on the chart here so you can see. 5 weeks in a row that the Dow has fallen, and 60 out of the 64 other times that this has happened, it was a bigger drop, which means there are only 3 times that have fallen less than what the Dow has currently fallen. So really it's letting you know the Dow has fallen 5 weeks in a row, but it's not that big of a deal. Average drop for a 5-week loss. Anytime you look at the Dow and you say it's fallen 5 weeks in a row, the average drop is 10%. So you can see the Dow on the day. It's a little bit positive. If you started investing anywhere in here, you're probably in the Dow, you're probably like, why am I not gaining any money? Why am I not losing any money? Why is nothing happening? It's a lot of back and forth there in the Dow. The S&P 500 tells a similar story, but had obviously much better performance. The Dow was a relative underperformer there. Now, broad market-wise, we've been telling about the same story all day, or all week, every single day. Technically and news-wise, I can't think of the word for that. So looking at the charts and looking at news, if you're to follow that sort of thing, from a technical perspective, the markets are slowly deteriorating. You've got the number of stocks in the S&P that are above this blue line, I've been bringing it up every day. It's a low number. We're only at 41% as of today that are above the 50-day moving average. That's near lows, right? So you could look at that and say, wow, most stocks in the S&P are actually below this 50-day moving average. I'll give you a good example. I'm just using this as an example, but CenturyLink, below the 50-day moving average. So this is the picture that we're talking about here. You have only 41% of the stocks that are currently trading above that. Microsoft would be an example of one trading above the 50-day. So you could look at that and say, well, okay, that means there's some opportunity here. If more stocks have pulled back, does that mean I get more of a discount on some of these stocks if I'm more of a stock picker? Really, the answer to me is the market is prime to bounce. However, we need news, right? Because on the news side of the equation, you have investors prepping for the absolute worst case scenario in dealing with China. Look at the semiconductors just continuing to fall there. Tech stocks continues to be an incredible underperformer. If you're to compare the tech stocks to utilities, to consumer staples, things like that, you would find that the tech is an incredible underperformer. Why? Because the world is preparing for the U.S. to essentially be in this long battle with the Chinese, and they're trying to price that in. So, look, technically, the markets are sort of deteriorating and slowly falling apart, sector by sector, piece by piece. A lot of rotation into the consumer staples. But from a news perspective, we're like, we don't know what's going on with China. You got a little help from Trump today saying that the China trade war could be over quickly. No real details on that, right? It was kind of just like, okay, you're trying to prop the market up again. We get what you're doing, mister. So anyways, that's where the markets are here. If we go into individual sectors, utilities hit new highs again today. It did pull back a little bit, but utilities are currently the only one of two sectors that are up on the week, that had a good week, but are also up on the month. If you look at XLV, I'll use for healthcare here in the dojo, that is another sector, believe it or not, that is not only up for the week, but also up for the month. Every other sector in the S&P 500 is down on the week and down on the month, so not looking too good there. USO, or oil, you could use to track that. Oil is the worst performer of this week. However, it's the best performer of the year, right? So you had the best rally out of all the sort of categories there in S&P, but yeah, it did really suffer this week, so there's really nothing pretty about that one. If we go over to some stocks here, you got Autodesk, there you go, reporting earnings. They missed on earnings by just a couple cents. The big deal was they lowered guidance going forward, if you're familiar with Autodesk. Boeing, there you have it, a little bit of a gain there on the day. It was a report out of Reuters, I believe. Reuters was the first to break that one today, saying that the 737 could be flying by late June. I put it in the scroller below, so you have that there. Texas judge out of, Texas. It's Friday. Texas judge rules that Facebook's actually should have to face the sex trafficking lawsuits, which they've since taken down all that, I believe. Foot Locker down 16%. They missed on earnings. They lowered guidance, right? So no good there for Foot Locker. Actually, quite a sizable drop. Foot Locker's been a lot more active around earnings, and we pointed that out last couple earnings just for fun because, I don't know, maybe you like Foot Locker. Intuit, this is your TurboTax and QuickBooks, things like that. This is higher by about 7% on the day. They beat on earnings. They beat on revenue. They raised their guidance. So you got sort of the triple whammy or the inverse triple whammy of good news all around. So three great little results from them. Gives the stock price higher by about 7%. We pulled up Microsoft already. Didn't really do a whole lot today. Microsoft is now joining the other companies saying we are going to halt orders from Huawei. They buy some of their phones and stuff from them, so they're not going to deal with them. And Ross Stores reported earnings down about 2% on the day. They lowered their guidance as well. I believe they beat on earnings. They beat on earnings by it was a penny. They beat the street by just 1 penny. So that's what you have there. Going into the new week, remember Monday the markets are closed. We come back on Tuesday in the morning. You're going to get earnings from Momo if you like that sort of thing. Do you like the Chinese YouTube? Well, it's not really YouTube. You ever look up YY? Do you guys like these? I'm just familiar with a lot of Chinese names. YY is like YouTube if all you could do on YouTube was post live videos. If all you could do was go live. It's incredible. Go to YY.com if you ever just want to study what's going on around the world. Super it's not weird because we do it here, but it's just like so much more common over there. People just turn their cameras on and start singing. It's incredible. And then the tokens and everything you can leave for each other. It's pretty cool. Anyways, check it out. They're going to have earnings Tuesday after the close, along with Workday. Incredible powerhouse little tech stock there that's done really well. The dividend yield on the S&P is almost back to 2%, by the way. That's good news if you like that dividend, if you're kind of focused on that sort of thing. Utilities were your biggest mover of the week. In the commodities space, you had crude oil. Obviously, that was your biggest mover to the downside. We covered that. If you follow gas as an aggregate, or if you follow heating oil, that was also your biggest loser. And yields, the prices on yields hitting highs, or I'm sorry, I said that wrong. The prices on bonds hitting highs. One of your bigger movers in the bond space was the 10-year, had the biggest move, which means the 10-year yield dropped, prices were higher. So pretty cool there. And I believe that's all I have for you. I pretty much, I don't know. I mean, how much more can we say? The story every day has been the same. So if you joined one class or one of our shows this week, you sort of heard similar things today and throughout the rest of the week. Michael says, don't mess with Texas, man. That's where I'm from. I hear you. I don't say it often. Cowboys fan. Yeah. You see 165 on Apple if they have bad news. I've been seeing what you're posting there. Are you sort of cheering for that thing to drop? You like the idea of lower prices, I think. You're hunting for a bargain there. Yep. Master G says, weird question involving REITs. Can I diversify a portfolio which is made mostly of REITs by picking subgroups such as communications, storage, industrials, mortgage, etc.? I don't know you would call that diversifying. If you're saying you have REITs as a whole, like some sort of ETF, mutual fund, whatever it may be, and then you think you're diversifying by going and buying the individual names underneath it, you may just be duplicating what you already have in the said ETF or mutual fund. So first do your research there and see how you're already invested. And then if you want to add more individual stocks, just make sure you're not doubling up. You hate to see that you're adding something. I see that a lot in the TSPs, where people double up on the same investments and then they wonder, like, why did I fall so much when the markets fell? So a little bit of homework there. But could you? Absolutely. You sure could. And you could diversify quite a bit from, like you said, the storage companies. You could get into the American Tower, right? The companies that lease out the cell space. Like they come to if you have land and they say, hey, we'll give you some money if you let us put a cell tower there, that sort of thing. That's a REIT as well. Healthcare REITs, there's almost no end. Tech data REITs, there's a lot of cool things in there. Dustin, in your opinion, is it the right time to buy REITs? Well, I can't say if it's the right time or not. I'm not allowed to say that. But if you enjoy buying momentum, then REITs, utilities are offering you momentum, even still consumer staples. If you like buying discounts or you don't like paying up for stuff, it's kind of a tough argument right now. You're getting these sectors that are becoming overpriced. Utilities, once again, historically overpriced. But there are people that like to buy high and sell higher. If you like to buy low and sell high, then the answer would be there's probably at least 6 other sectors you could look at. Vape and Dape, what's the exposure for Levi? I actually don't know that one. That's a new IPO. So I haven't followed them as a private company as much. And it's a new IPO, so I don't tend to follow them until 200 days after they go public. This probably could be the one rare exception because this is a well-known historic brand, was a public company at one point, went private. Obviously, they've been around for years and years. This is different than a brand new sort of startup company going public. So I probably could start doing a little more research on this one. It goes against my general rule, but for you, I love it. Financial Investor says, you don't know if it's the right time to buy until you buy and watch it go, or you buy and get a better discount. I can tell you're a fan of averaging in. I too am an average in kind of guy, whether it's up or down. I just enjoy that approach. I don't like just making a bet all in one shot. So I would agree with you definitely on that one. I'm a discount guy, though. You know what I mean? I like discounts in good sectors. I'd like to see REITs pull back, not because of yields, but to just pull back and take a break from like a little profit taking. I like the idea of people panicking over tech and semiconductors and things, but it's a hard one to quantify. It's just, I'm a discount guy. I always have been. Time to buy pipelines, you'd have to be more specific than that. We could go in a number of different directions. Are we talking natural gas? What are we talking? Help me out there. Is your dividend portfolio comprised of many REITs? So yeah, our dividend or our portfolios are all on our website, so you could see the kind of mix of funds that we use for our customers there. We go as far as to have our own separate REIT fund. So we have a dividend fund. That's all on its own, has its own objective. We like big companies that pay big dividends and have a history of paying those dividends. We don't like to see a lot of fluctuation in dividends there. The description's all on the website. But then we go as far as having a REIT fund all on its own. So instead of, which obviously has a good yield as well, but that's completely separate. You can check them out if you like. Yeah. Energy got a little bit of a boost today. Yeah, well, I mean, it's not bad. I mean, a little recovery, especially in the price of oil, a little recovery. Not enough, right, to make it sort of exciting or recover much of any of yesterday, the day before, Wednesday, and Monday, but okay. Yeah, it's gone up a little bit. Yep. Cool. Well, I do believe I have covered everything. I put the colors back. I got it all changed. We had a little fun yesterday changing it to red. Won't do that to you again, I promise. Hope it helped you in some way today. Hope you had a good week. Remember, Monday the markets are closed, so therefore we won't be here doing the show. There'll be nothing really to cover. So we'll be back on Tuesday. If I helped you in some way, maybe you'll hit the subscribe button. I do love that. Yeah, that's it. Have a great, safe, long weekend, and hopefully enjoy the weather. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.